Right, so I just want to give a bit of an explanation of the directional trade. Now, this comes under the mean reversion strategy. Mean reversion meaning, basically the opposites of the market breaking high or breaking low. So if you've got a market coming down, it sort of say it pulls back, and rather than pushing through and breaking lower or higher, for example, it comes back within the range. And I find this a fantastic strategy to use, and it really utilizes, or what it lends itself to utilizing really well, is other markets. Because the other markets I find is the best way to give you information of what's potentially happening in the future, whether it's looking to come back in within itself, as in back into the range, or whether it's looking at breaking lower. Now, within the mean reversion strategy, there's two basic ways that I look at it: the directional setup and the reversal setup. And the reversal setup just came as a result of the directional. But just what I found, the directional by far the trade that has the highest strike rate. It's a fantastic setup, but the downfall of it is opportunity is fairly small. Meaning it doesn't come up a lot of the time, anywhere from 2 to 4 times a month. If it's a good month, maybe five, six, but some months, two. Uh, sometimes only two a month. So the reversal uh, is basically taking the directional and just sort of giving myself a few more opportunities. So the strike rate's not as high, but I'm still looking to take advantage of this situation where the market many times comes back within the range, and the other markets give a good job of showing that that's going to happen. But for now, I just want to focus on the directional. So I've got an example here. So basically three rules, but very specific in what I'm looking for. So first thing is must have a previous trend. So what I'm really looking for is to pick up on the second or the third trend of the day. I'm not looking for this particular setup at lows or highs of, say, the first trend or anything like that. There must be a previous trend. So you can see here, this example, there's a setup over here. There's a trend. Okay, so now I'm looking for the market to come back within itself. It needs to it's mean reversion, meaning that it needs to be a previous trend and it needs to come back within the trend and have something for it to aim towards. So just think of it as a directional buy needs a high to aim for at least 3-4 points away, or a directional sell needs a low to aim for. Very important first part of the setup. Second is predictive average reversal formation. So using, and I've got there brackets, holding and building pressure. So using the predictive average, it's an indicator, but using it as a guide to set up. So this particular one here, I'm using a buy example here. So the predictive average needs to cross up, cross down, then cross back up while holding and building pressure. Meaning if all of a sudden this predictive average crossed down and then it sort of just broke its lows, or came back and really put some pressure on its lows here, then it's not containing it and building pressure. That's not a reversal formation. It's getting some momentum, and it's picking up more sell orders to potentially push down. So what we want to do is squeeze out, in this particular example, the sellers, and need this predictive average, cross up, cross down, cross up. So that's a reversal pattern, while holding and building pressure to the upside. So making, coming back and potentially making a higher high here. That's not necessarily essential, but to put some pressure back up like this, so it's not just a little sort of pullback before it's potentially going lower. So getting a decent bounce, comes back. Most importantly, needs to not make a lower low, and then and then as the predictive average crosses up, by at the end of that candle or wherever pressure is at its greatest. So that's where the third rule comes into play. Must have other market support. So other market support, I've gone away and very clearly defined that, and what that is uh, all the markets looking at reversing, and at least one of them showing really good signs of going. So usually the Russell or something like that, you'll see the Russell already breaking, say for example this sort of pivot here, and there's clear signs that all the other markets are going. When these best directional trades, you'll see something like, and it's usually the Russell, as this is about to set up and we've got this predictive crossing back up, the Russell might be already somewhere up here or something like that. It just takes off. It shows it's already well into its mean reversion, and it's heading back to where it came from, back up to the highs. So must have other market support. Head back to the downside. And then just to elaborate on reversal, reversal is the same sort of situation, looking to take advantage of mean reversion, coming back within the trend. It's not as necessarily as detailed as the directional. Also, there's details, but it's not as specific. Basically, anytime there's a 5-minute sell or buy, 5 minute trade, 5 minute fade, or sort of an opportunity where the predictive sort of crosses down like this and it's looking to break lower, then all of a sudden it comes back on itself, and that particular setup, so whether it's a five, in this particular case, say a 5 minute sell, maybe it goes a bit higher and it's looking for a 5 minute fade, or say a 5 minute breakout trade to the downside, and all of a sudden that particular selling, what I'd say selling opportunity fails, and it comes back and breaks the pivot, or the area where it tried to sell from comes back and breaks, and I look to buy as it's breaking that particular area. And again, all other must have other market support, and it's really the reversal is really based on the market breaking a pivot, or where the market previously tried to go lower from. So in this example here, if I was to approach this as a reversal trade, I'm just circling this here. This is where the market should have pushed lower from. If it comes back, pushes pressure on that, I'm looking to buy and break through and back into the range. So that's the reversal, whereas the directional is more specifically quite often getting in earlier, but that's because it ticks all the boxes. It's got a really great reversal formation happening. But both strategies take a great advantage of the mean reversion. So again, here's just another example, the opposite. So rather than a directional buy, directional sell, see there's actually a reversal here too, even though it's a loss and a break even, still the concept applies. On the directional for a second, it's the market comes up, it's got a previous low to head back towards, it comes down, predictive crosses down, crosses up, crosses down. As it's crossing down, so if I'm waiting for it to physically cross down, I don't always have to wait for that, otherwise it would have been a bit too low and well down here. What I was looking for is as it's either as the predictive average crosses or as it breaks its pivot, so the lowest previous point, I'm looking to sell, and that's where I'm getting in. So I'm looking for a continuation of that pressure. This particular one, it's just come back and tested the area a little bit higher than it normally does, and then it's gone lower, but you can see it's clearly got something to aim for. Would have had all the other markets supporting it and pushing through that area, and it's got that reversal pattern from the predictive. Whereas the reversal, see the reversal not quite as solid, not quite as much of a distinctive formation, but what I'm basing it on is this particular pivot. The market made a pivot here. This is where it should have actually gone higher from, but must have seen all the other markets starting to really reverse, and as it came down and put pressure on this pivot. So I either sometimes wait for it to physically break, but normally I'm getting in 2-3 ticks before the pivot because all the other markets are really starting to push down. So but this one here, I did physically wait for it to break, but if it's an obvious clean cut one, and getting in as early as possible, because many times it will break, come back, test the area, then go. So you want to give yourself a best entry, so to try and eliminate those break even chances. But that an example of a bit of a reversal there, same sort of idea, two in the same area, but eventually the downtrend has come. There's obvious signs that it's got a low to aim for. All the other markets would have been pushing lower, showing signs of going lower, and at no stage is it getting any pressure back on the upside. It's failing to go higher. It keeps failing at all these sort of 1, 2, 3 points there. It's all about mean reversion, and that's the strategy.